US has been the center of global finance for nearly a century. But what happens if that starts to change? Because right now there's a group of very powerful nations, they're quietly pushing for a new global currency, and it's gaining traction, and they're called BRICS. The dangerous part? Most Americans aren't even paying attention to this. They assume we're insulated. But if the movement succeeds or even halfway succeeds, it could literally reshape inflation, trade, and how we build and protect wealth. So in this video, I'm going to break down 5 things that you need to know about BRICS and how to position yourself before the ripple hits your wall.
One shot, now the future is yours. Go!
Is America the greatest country in the world? That question sparks some super heated debates. But one thing's hard to argue. For nearly a century, the US dollar has ruled global finance. And since the end of World War II, it's been the dominant reserve currency used in major and international trade, and it's held by central banks across the world in all these different countries. In fact, over 58% of global foreign exchange reserves are still held in the US dollar, which means that when other countries want to keep a stash of just-in-case money, they usually choose the US dollar because they trust it more than their own currency. And US GDP is over $27 trillion. The US makes up literally 25% of the entire global economy, and that's because we're a consumer economy. Americans buy more stuff than most anyone else in the world, and that demand fuels production all around the world. And it's part of what gives our dollar so much power. But let's be honest, we did not get here without ruffling some feathers along the way. Not every country wants the US to keep calling the financial shots. And honestly, I get it. Competition can be healthy, but smart competitors know that you never ignore your rivals, especially when they start playing a different game. That's why we need to talk about what's happening with BRICS nations. Because whether their plan succeeds or not, it's already sending shockwaves throughout other global financial systems, and it could change literally everything from how we trade to how we save. So let's dive into the 5 things that you need to know about the BRICS currency play. And before we do that, hit that like button, subscribe, tell the algorithm that you're liking this content, that you want more of it, and that it is totally shareable, as in share it with someone right now. All right, number 1, what exactly is BRICS? Well, it stands for Brazil, Russia, India, China, and South Africa. It started in the late 2000s, and not as a formal alliance like NATO, but more like a loose coalition of rising economies who felt like they were playing by someone else's financial rules, specifically the US and its allies through institutions like the IMF, World Bank. Think of BRICS as like the underdog club who's trying to create a more multipolar world. Sure, they do not get along perfectly, but they do share one big goal: reduce US dominance in global finance. Together, the BRICS nations represent over 40% of the world's population, around 30% of global GDP, and massive reserves of oil, gas, gold, and now they're expanding. In 2024, they literally invited 6 more nations: Iran, Egypt, Ethiopia, and the UAE, turning BRICS now into more a global economic heavyweight. So why is a real estate dude talking to you about this? Like, why should I care? Why should you care? Because their most disruptive idea is launching a shared gold-backed currency that could one day rival the US dollar. And it's not live yet, but the fact that they're actively working on it, it's a sign that global trust in Western financial systems is beginning to erode. Number 2, what do we actually mean when other countries say that they trade in US dollars? What does that really mean? Let's simplify. When 2 countries trade, let's say it's India, they're buying oil from Saudi Arabia, they don't usually use their own national currencies like the rupee or the rial. Instead, they use US dollars. It's the global middleman. The dollar is trusted, it's stable, and it's backed by the world's most powerful economy. In fact, that is what it means to be backed by the global reserve currency. 85% of all international trade is still settled in US dollars. And it's not just countries doing it. Big companies, when they buy and sell oil, grain, semiconductors, raw materials across borders, they almost always settle these deals with dollars. It's like the global default setting. But when most of the world is using your money, it gives your country huge leverage. You can borrow money cheaply. You can apply pressure, like when the US cuts Russia off from global banking after the Ukraine invasion. But here's the risk. That only works if everyone keeps using your money. And BRICS, well, they're working to change that. Countries like China, Russia, and Iran, they're already settling deals in their own currencies. Every time they do that, it chips away at the dollar's dominance, one trade at a time. I remember when I was a kid and everything that was like I was being indoctrinated with is how America is so great. And I'm like, yeah, like there's all this patriotism, but it turns out that there's more to it than that. Literally, this is the stuff that the world is ultimately using for doing their deals. And countries are now moving away from this. And if that happens, well, then that reduces our global dominance. And then what kind of world are we moving into? More importantly, how does that affect you and I when we're just Americans that are buying and trading and doing stuff? That's where we're headed. Hey, sorry to pause the video, but this is too important not to share. If you're working 40, 50, 60 hours a week or more, and you're chasing success, and you're still feeling like it's not enough, maybe it's time for a different strategy. Me and my team are offering free financial game plan calls to help you get a break from the grind, stop wasting time on single-digit returns, and start building real passive income through smart real estate investing. I'm basically gonna put myself in your shoes and say, what would I do if I were you to get where you wanna go quicker so you can also have more time to live the life that you feel called to? Click the link below, book your free call today, because I want you to live wealthy and live balanced. Number 3. A gold-backed currency. That's a really big deal. It's one of the boldest ideas coming out of BRICS Alliance is that they want to create a gold-backed currency. Now, if you've never heard that term before, let's break it down. Most of the money in the world is a fiat currency, which means it's not backed by anything physical, like a US dollar, literally. A US dollar is worth a dollar simply because the government says so. It's built on trust. It's built on confidence in its value. You trust that when you get paid in a dollar, that you can spend those dollars somewhere else on food and gas and rent and basically whatever you want. But it wasn't always like that. Up until 1971, the US dollar was backed by gold. That means that for every dollar printed, there was a certain amount of gold that was held in reserve to match it. You've heard of Fort Knox? Well, that's where that saying comes from.
By infiltrating the United States Gold Depository at Fort Knox.
It's not just a cartoon. That's the way that the world used to work. Before the US left the gold standard, Fort Knox held an enormous amount of gold. And it was the most secure and heavily guarded facility in the world. And it literally was just filled with tons of gold. But in 1971, President Richard Nixon, who I think is kind of known for being a crook, took the US off the gold standard, and it was supposed to be temporary.
Dude, check the news. It doesn't matter what channel.
I have directed the Secretary of the Treasury to take the action necessary to defend the dollar against the speculators. I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold or other reserve assets, except in amounts and conditions determined to be in the interest of monetary stability and in the best interest of the United States.
But then it became permanent, and since then, the dollar's been free-floating, and the government basically has the power to print as much as it wants. If you remember the last administration, they're like, oh no, we're telling companies they can't work, and people have to come home because that's what's gonna create safety. So let's just print trillions of this and ship it in the mail and say, we're sorry. And I'm like, that created inflation. Why? Because the dollar lost confidence because they created more of it. And as it lost value, guess what it did? It's like, thank you for this money, but it also increased the cost of gas and bread and everything else that I need in life. Was it a smart move? Might have felt good to get the check if you got one of those, but it hurt us in a really big way. Now here's why this matters. Printing too much money, which they call financial easement, it leads to inflation. When there's more money chasing the same amount of goods, prices go up and your dollar buys less. A gold-backed system, it would limit that. You can't print more money unless you have more gold. It forces discipline. Quick little tangent. Think of why Bitcoin is only growing more and more in value. It's because there's a limited supply. The moment it was created, they already designed how much of it would ever be mined, and then that was the end of the story. And by the time they finished producing their last Bitcoin, it's estimated that half of the money is lost in wallets, which makes it even more scarce. So why did something that started at a penny when I got involved was worth $10,000 and today is worth over $117,000? It's because it's limited. And that's what happens when you base something on gold, which is limited, versus fiat money, which you can just print more of. That's what BRICS is looking at. Countries like Russia, China, they've been stockpiling gold for years. And the idea is that instead of building a new currency out of thin air, fiat money, they could just tie it to a physical asset, something that the world has trusted for thousands of years, something that they have that they've stockpiled that we no longer have. And if they succeed, this new BRICS currency could literally offer the world something that the dollar no longer has, a built-in hedge against inflation. And that could be really appealing, not just to BRICS members, but to other countries looking for a stable alternative to the dollar, because we've got countries that are moving away from the dollar right now in droves because our previous policymakers have been making a lot of, let's call it foolish, unwise choices. Now, will it happen next year? Probably not. But the fact that world powers are even talking about it means one thing. Trust in fiat money and the US dollar, it's wearing thin. And a gold-backed currency, even if it starts small, could eventually change the way that money works on a global scale. Which brings me to point number 4 of 5. The real strategy is de-dollarization. That's just a fancy term for saying we're trying to stop using the US dollar, and it's not just talk anymore. China and Brazil, they're now using the yuan and the reals. Russia and India, they're trading in rubles and rupees. And even Saudi Arabia is signaling that they may be open to selling oil in non-dollar currencies, something that would have been unthinkable a decade ago. Why would they do this? Because using dollars gives the US control, and a lot of countries are tired of basically playing by America's rules. And here's the example. When Russia invaded Ukraine, the US hit back with financial sanctions. This froze Russian assets, and it basically cut Russia off from doing something they could have called SWIFT. What's SWIFT? Well, it stands for the Society for Worldwide Interbank Financial Telecommunication, which sounds kind of complicated, but basically it's the messaging system that allows banks all over the world to talk to each other and move money around. So if you get cut off from SWIFT, it's like being banned from a global ATM network. You can't send and receive funds internationally. It's economic isolation. So when the US cut Russia out of SWIFT, it was a powerful move. But it also sent a message to every other country watching, which is if you cross the US, we can shut you out of our system. And this scared a lot of nations, especially ones that don't have perfect relationships with America. This is why BRICS is trying to build new systems, alternative ways to trade, settle payments, and move money that doesn't rely on the dollar or US-controlled networks. Some of these systems are already in place, especially between China and Russia. Others are still in development. The point? De-dollarization. And it's not some distant possible thing. It's actually happening right now. And the more countries that can participate, the weaker the dollar's grip on the world becomes. And remember, this doesn't have to be a total collapse to have an impact. Even a small shift away from the dollar can mean more inflation at home, higher interest rates, rising costs of imported goods. This is about slowly eroding dominance, not just flipping a switch. Number 5, finally, what does it mean for everyday investors like you and I, and why am I making this video? Well, you're not the central bank, and you're probably not settling trades in oil, but the ripple effect of BRICS, well, that currency could literally absolutely hit your wallet. And here's how. Imagine for a moment if more global trade shifts away from the US dollar and demands for the dollar goes down, which means people don't have confidence, they don't want to use it anymore, they're going to back this BRICS currency gold thing. That makes the dollar weaker on a world stage. And a weaker dollar means that we have to pay more for things that we import, like fuel, electronics, or even groceries. That's inflation. Could be a lot of inflation. And your paycheck, it doesn't change. Your buying power shrinks. So it's just like I still have the same amount of money, but it just doesn't go as far as it used to. So to fight inflation and keep foreign investors interested in holding US assets, the government might have to raise interest rates. Well, we've already seen in the last few years what that actually does. This means that it gets more expensive to borrow money. Mortgages go up, credit cards, interest rates rise, business loans tighten, slowing growth. I wonder if this is why the Fed has been fighting Trump so much on not wanting to lower the interest rates. Trump knows that already life in America is not very affordable. He has a goal of lowering rates by 3%, because if he can do that, he can kickstart the economy, he can move real estate, and he knows that it's going to create more jobs and it's going to be better all around. But look at the pressure we have on the other side of the fence. Here is the flip side. In times of uncertainty, smart investors move their money into hard assets like real estate, right? Things that you can touch and things that you can feel, or precious metals, commodities, crystals. These tend to hold value when currencies lose strength. And if BRICS succeeds in building a trusted alternative to the dollar, even partially, we could see a flight to safety from traditional cash holdings. That could drive up the price of gold, spike interest in crypto, increase demand for income-producing real estate. And this is why investors are already starting to diversify. They're not panicking, but they're positioning themselves because even if BRICS as currency doesn't launch next year, well, the trends are already in motion. A world that's less dollar dependent and more fragmented means that you and I, we're going to have to change our strategy, and we're not going to probably want to put our money into things I've been telling you about for years. You put your money in the stock market, inflation hits you there. If we have inflation, you want to own real estate. What happens? Because the prices go up a lot more. You want those tangible goods. And in that kind of world, having all of your wealth tied to a single fiat currency, like the stock market and the dollar, that becomes a huge risk. There are some that even speculate that even though for the last century we've seen the stock market average 8 to 10% over the next decade, there are some analysts that are predicting that that number could drop to 3 to 5%. And all of a sudden, the stock market is not going to look like the most beautiful place to put your money. But having your money in something real, that's how you stay grounded when everything hits the fan. Listen, whether or not BRICS currency becomes real tomorrow, the movement behind it, it's growing. It's already reshaping the financial world. The dollar isn't collapsing, but it's being challenged. And in a world that's less dollar dependent, you can't afford to stay uninformed or unprepared. So let me just say it one last time. How do you protect yourself? This stuff should not be sitting in 401ks and IRAs in the stock market. I don't have anything in a 401k, IRA, or stock market. I never have. But real estate, it literally has outpaced that market the way I invest. 27 to 1 over 20 years. That's not small, that's really big. And frankly, if inflation's gonna get worse because of BRICS, then my real estate's gonna pay me even more money. It's time to get financially wiser. Make sure you're a subscriber, learn why I invest in real estate, get my books, I provide them out to the market for free as much as possible. Get yourself educated because the world is changing and you are at choice with what you do with it. Buy real estate, hold it, and if you want to learn the intelligent ways of passively doing that and maximizing your return, make sure you click those links in the description below. Get yourself educated on more of my tips and tricks of how you do that. Let's win.